What a surprise earnings call for Tesla stock. I don't think anybody had on their bingo card that big of a jump in EPS, but Tesla pulled it off. And the stock responded with a 2021 style run just after earnings. So the question becomes, is this just the beginning of another 2021 style run, or is Wall Street going to play more games with us and end up leaving us with a lot of disappointment in the end? So let's talk about all that today and find out exactly what Wall Street's saying. Just make sure you hit that like button if you like getting the truth without the hype, guys, because that's exactly what you're going to get here. All right, so like we kind of said there in the intro, that was right there was a big beat on EPS there. Definitely was not expecting that. Definitely was not expecting margins to improve as much as they did. And hey, that's good news for us as shareholders there. Now, we did actually miss revenue, so we kind of got half the call right, half the call wrong there. But nonetheless, it's a good sign. Either way, we thought that the previous earnings call was kind of the bottoming and trough, and we were kind of hoping this one right here was that next leg up, but they kicked it up into high gear in regards to that EPS number on those margins going up significantly higher than we thought. So that's all good news there. And of course, we got the associated stock bump up with that as well. So congrats to you guys that were buying it whenever it was down this year when we were talking about, hey, buy it. Don't buy it at 240 last year, 260 last year. Wait just a second. Elon told us, hey, we got a full year, basically down because of everything else going on, especially with the Fed raising rates and everything else like that. And that's exactly what we got. And of course, if you were patient, you were able to buy like we were in the 160s, 140 range, all the way down in there. I bought some shares there as well, which don't forget the spooky sale ends in just a couple of days where you could have seen all those buys in real time. I wasn't FOMOing in at 260. We were buying it like crazy when it got underneath 100, especially when it got under 150. It just seemed like buy alerts were going off all the time there. We'll talk more about that at the end, but make sure you take advantage of the sale before it expires. It's the pinned comment down there. But that's all in the past, guys. We need to know what's going to happen moving forward. So let's take a look and see what Wall Street's saying. And of course, I'll give you my take on all this as well moving forward. Oh, and for all the folks that are going to call me a bear down there, yeah, here's your bull thesis. To the moon. $1,000 per share at the end of the year. There you go. But for the rest of you guys that want the truth without the hype, let's jump into the video here.
Spotlight on Tesla, which had blowout earnings. The stock surged, had its best day in over 11 years. And if you look back to the year 2013, there was a day where it was up 24%, a month later up 47%, and a month later, 3 months later, another 141%. So does more gains beget more gains? Let's ask Dan Ives, Managing Director, Equity Research at Wedbush Securities. Good to see you, Dan Ives. Some of your thoughts on the stock moves, which have been monstrous this week, can it continue to move higher?
It's just starting, because what I view is they needed to ultimately show that margin story, that it was going to rebound, and we saw just massive margin rebound in terms of for Tesla. And it's all about deliveries into next year. 20 to 30% growth, much higher than anyone expected, even the bulls like us. I think it's get the popcorn out. This is just the stage to this company being over $1 trillion market cap.
Now, you notice right there, he's got his price target at $300. We're getting pretty close to that right now. So my guess is he'll be moving that out forward. That's what analysts do. That kind of go along with where the momentum is at this particular stage. So typical analyst speak there, but the good news is that we finally got the margin has improved, right? Basically a year later from when Elon said, hey, the next year is going to be rough. So here we are pretty much right on time. I wish everything else would come out on time in regards to Tesla. But nonetheless, we got it where really it matters the most as a long-term buy and hold investor, which of course is with the margins. Now, getting back to $1 trillion, I'm sure that it will at some point in time in the future, unless they just, continue to stagnate for another year, but they guided the 30% growth there. So obviously, unless they significantly miss that guidance, it shouldn't be a problem to get back to those levels in the next few years. I don't know if it'll happen next year. I don't know if they'll have the margins and the EPS number to justify if they do get there next year, but it won't be crazy overvalued like it was in 2021, where that was just stupid overvalued. And we saw that. We talked about it back then. Basically said, hey, guys, it's going to trade flat or down for years. And that's exactly what happened. So maybe we're finally getting the momentum moving in the right direction if they're able to hit those guidance numbers to get us out of that doghouse and to be able to actually justify a valuation that's high like that.
I mean, someone, when I was asking about the competitive landscape, said there is a monstrous difference between Tesla and Lucid and Rivian. Would you say that's right? I mean, not even in the same sentence?
We're talking Mahomes compared to other quarterbacks, right? I mean, this is just a separation from a scale and scope. They're going to have 2 million deliveries next year. I mean, a lot of these other, you're talking about 100, 200K. what Tesla's able to do right now it's expanding that product line. You'll see Semi, you'll see Roadster, of course, Cybertruck's out there. Sub $30,000 vehicle, we think, going into next year. That's ultimately going to be the key as this all ultimately plays out. And look, you go into this, me and you've talked about this the last few weeks.
Kind of want to highlight the point right there. It's kind of funny. Somebody walked in the background there, realized he was on, he was live, and kind of jumped back. But nonetheless, I hate it. I won't say I hate it, but when folks want to plan out, oh, let's mention the Roadster. It's not even here yet. Even when it comes, it's not going to add a significant amount to the bottom line. I don't even bother mentioning things of that nature until we start to get closer and closer to those things providing revenue and such. Even if Roadster is able to provide significant revenue and margins, I just don't think it's going to sell at scale to make it. He's absolutely right. What we're waiting for is that under $30,000 vehicle, which is the next thing up. And I wish that we as investors would focus on that and some other, I won't call it alligators closer to the boat, but stay out of the speculative realm and view more Tesla and not necessarily what's currently here, but what's, projected to come here in the next year or two, where we can make reasonable assumptions, reasonable evaluations, and more importantly, it gives us an idea as to what Wall Street is going to do with the stock in the meantime. Or if Wall Street decides to get crazy and push us up to 1,000 PE like they did in 2021, you're able to effectively, as an investor, avoid that disaster, which was everybody that bought at that stage. Because heck, we've had an incredible run the past 2 years in the stock market there. And all those folks who bought at that particular stage have had the exact opposite happen to their portfolios during that time. So obviously we don't want to be in that situation.
New York City cab drivers barraging Tesla into this quarter. They showed the margins, they showed the delivery, and I do believe the robotaxi takeaways was the wrong one that the bears came away with. This will be an autonomous and AI story over the coming years.
Kathy Wood over at ARK Invest.
I don't think the question is, will it be that? The question is, what's the time frame? Is it 2 years or is it 10 years? That's kind of where the discussion comes in regards to the AI story and the autonomous story there. Obviously, some folks think it's super aggressive. Other folks think it's a decade away. Probably more in the middle of those two numbers at some point in time. 2 years versus 10 years, probably somewhere in the middle there once we get through all the regulatory hoops, everything else that has to happen. And more importantly, get to a point where it is contributing significantly to the bottom line in regards to that. But we got to solve FSD first. So let's kind of start there before we start speculating on anything else.
77,000 shares. The closing price was $260.48, valued at over $20 million. Mistake taking some profits now? I mean, how quickly does this stock grow? Was that not a good move on her part?
Look, Kathy and ARK, one of the biggest supporters of Tesla, right? So, they'll, for the long term, if you look at their model on robotaxis and where this is all heading, it just speaks to our broader point. This is the most undervalued AI play in the market.
I have no idea how that answered her question at all. So I'll answer it for you guys. Who cares what Kathy Woods does? She's a fund. She has to do things to rebalance her portfolio, all these other goofy things that they have to do. Add in the fact that a lot of their moves just have not been the most kind of one of those situations where sometimes you're too smart for your own good, maybe, or maybe you rely too much on models where maybe an input or two is not as accurate as you forecasted, and therefore it causes poor decision making. I don't really know, but it's absolutely useless. He didn't answer the question at all either. He just went right down whatever Tesla talking points he wanted to go down. So all the way around, but just so that way you guys have my take there in regards to ARK and why I literally have zero interest in what they're doing or care what they're doing. Yeah, so I won't argue there. But I agree completely. They finally hit where it matters. And this is what I tell you guys all the time about valuation, about Wall Street. You can talk about all the different superlatives, all the tech improvements, all the things that are going on in gigafactories and everything else like that. You could cure cancer tomorrow. And if you can't, increase margins, increase profits, increase revenue, and guide to a higher number, Wall Street doesn't care in regards to the stock. Now, obviously, it's important to those folks that do it and enjoy that. But in regards to stocks and stock investing, they're hitting finally on the numbers that matter. They didn't for the past year. And that's okay. Elon told us that. He guided to that. So we adjusted our plan accordingly. That's what a prudent investor does. You adjust your plan based upon the information you have. And so I adjusted it. It's not be, a not prudent investor to me is somebody who just is bullish all the time and doesn't deal with the reality of the situation. I'm not talking about being negative because Elon said something stupid on X, Twitter, whatever. I'm talking about specifically looking at what's going on with the stock, what are they guiding to, and then adjusting my numbers accordingly, knowing full well, hey, they'll probably come back here in the future. At least I understand why, and I understand the struggle that's going on right now. And therefore, it kept me from buying when I shouldn't have been buying, and buying when the prices were a lot lower, down in that 140 range. In the end is where we ended up buying our shares at. I think some folks were able to get them in the 130s there. But nonetheless, that is what prudent investors do. But the bigger point being, they're giving Wall Street and investors from a stock perspective what they want to see. And whether we like it or not, whether we think it's fair or not, that's what matters. Again, you cure cancer, nobody freaking cares if you can't turn a profit doing it. It totally is irrelevant. Sure, it'll have a hype run because, of course, you cured cancer, but in the end, it's crashing and burning because you weren't able to turn a profit from it.
I started to hear some good things about the batteries growth, the Cybertruck margins. Those seem to be good news. There was some impatience pertaining to full self-driving at the end of 2026 because is that hogwash? Does that get pushed back to 2027? Is that okay for you?
To me, trying to look at 6 months, if it's first half 26, second half 26, I think it's splitting hairs in terms of where this is all going. Because the autonomous and AI story, I believe the AI story is worth $1 trillion alone to Tesla. So if it moves out 6 months, it doesn't necessarily move the needle for us. In the near term, it's really about coming out with a sub 30K vehicle. I think that's first half of next year. Margins rebounding, delivery growth rebound, especially in China. And then you start to look at all the growth levers that could happen here. That's why if you look at the last 24 hours, the bears, they're going back into those hibernation mode.
Elon Musk has shown his political cards. And what do you tell the Democrats? Should they sort of put their political views aside and still believe in Tesla?
Look, it's a tightrope. I mean, clearly, it's been a controversial issue, but I think in terms of U.S., despite all the noise, it's been limited from a demand perspective in terms of the impact. Now, I'm not saying going forward there can be some, a little nervousness on that, but the reality is if you produce the best vehicles in the world for EVs, consumers will buy. And I think we saw that with Cybertruck, right?
Yeah. What is your price target on Tesla, Dan?
300, and then bull case 350.
300, 350. In the cyber cab, I think, the timeline was a little vague. There's no cheaper model. People were a little disappointed with that. But there's definitely this feeling that there was some good news. We saw the stock surge. And as I said, there were times where this stock, once it surged, continued to do so the next month and then the following 3 months. Can I turn your attention quickly to...
All right, so we'll go ahead and end the video there. In regards to everything else he talked about, autonomous FSD, all the kind of things there at the end, when I think about those plays and I think about how that's going to impact the stock, more importantly, I won't say that it's quote unquote important to the now because I don't have it included in any of my calculations for really the next 5 years, because I just don't think that all the different hoops, you got to get FSD approved, regulated, actually working. We're not even to the level it needs to be at first before we can even start to consider some of those things. Then you've got to get out there, get all the different regulatory hoops done, which I know they're starting to work on some of them right now, but we're talking about at scale across the globe, hopefully. And that is a much, much larger project that will take years to work its way through. It's not a simple process. Then you got to get into demand, producing all the different vehicles and everything else. I'm not saying it can't happen. I'm just saying, for me, it is so many years in the past. Does he solve it now? Does he solve FSD in 6 months? Does he solve it for another year? Well, I mean, the track record's been, it's every time he gives us a timeline, just add, depending upon the product, with FSD specifically, just add 5 years onto it. You've been right more often than you've been wrong. But it'll eventually get solved. Don't get me wrong. Just don't go blasting me. I know he'll solve it at some point in time. But the point being, until we get through all those sort of things, we're really, really a long way away. So my focus really isn't on those. I don't really count those in any of my valuations. Those are cherries on top later on. I care much more about what's going to happen now. And when you see things like margins improving, when you see things like, guidance, especially increase in deliveries by 30%, where we basically have kind of a flat year this year, that's big. in regards to what's going to happen with Tesla. Now, that does not mean that the stock is going to go from wherever the heck it's at today to, all-time highs in the next 6 weeks or 6 months or whatever the timelines out there that are, or it's immediately going to be worth $1,000 per share in a year or anything crazy like that kind of gets thrown around out there. And that's just kind of what I want to caution you guys against, is to be very, very careful. Dan Ives will say something like the AI is worth $1 trillion. Well, I don't know. Is the AI worth $1 trillion in today's $1 trillion or 10 years from now, where $1 trillion may not be all that much? We don't know in regards to that. And I'm not going to base my investing decisions based upon that. Again, like we always say, you can look out a year, you can look out 2 years at the max in regards to kind of trying to calculate things. But beyond that, it gets really, really murky, and you're really doing much more speculating. And I'm not into speculating. Everybody that has speculated on Tesla eventually has gotten burned at some point in time, not because the company's not great, but because you get too far ahead of yourself. There's too many things out there. Too many things that we really don't know what the market is. We don't know if it's going to be a hit or a miss. And to say Elon always delivers is not true. He's had misses. He's had products that they've had to pull off because they just didn't work. And I can remember folks arguing with me in the comment section telling me it was a $2 trillion opportunity, and now it's completely gone and off the product line there. So I think the things are all moving in the right direction. We're seeing everything grow. I think we just got to kind of temper our expectations of, I don't need it to 10x in the next 2 years for it to be a great investment for me. If I get 20% growth over the next couple of years, 30% growth in terms of stock price, I'm a very, very happy investor. And more importantly, because I'm prudent with my buys, those buys, I get a better leap in regards to pricing than a lot of folks do. I beat that 20 or 30% growth in terms of overall stock price because I'm prudent with the buys that happen down there. And remember, you can learn exactly how to do that, how to do due diligence, how to be disciplined as an investor, and have a complete group of 6, 7, and 8-figure members helping you out do exactly that. Make sure you check out the pinned comment. Take advantage of the spooky Halloween sale before it ends. It ends in just a couple of days, where you get access to all that. Free courses, you got free coaching in there. We have so much involved, guys. Just check out the pinned comment and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. Well, thanks for watching, and we'll see you in the next one.